Ladies and gentlemen, there's a bloodbath in the Korean stock market with the KOSPI index falling by 10 over percent, almost 11%. And the same bloodbath are also visible in the Japanese and the Taiwanese index as well. So this is quite a serious matter. The question really right now is, will it spill over to the US market? Well, my view is yes, to some extent it will, because the reason behind the crash is going to hit the US market as well. So what are all these? What's my analysis? What's my take? What am I going to do? Please watch on till the end of the video. So the Asian stock market has crashed terribly. In particular, the Korean KOSPI index has fallen by nearly 11%. And that's largely because of chips maker in Korea now being sold down. And this is largely due to the fear that the AI bull run has now turned into a bubble that is deflating rapidly. And this is quite worrying. So the KOSPI index have collapsed by 10.8% in one day. That's very, very rare. In fact, the last time we saw this was almost in the great financial crisis of 2008 in Korea. So one day crash of 10%, and that doesn't seem to be stopping. A similar crash of close to 4% is seen in the Nikkei 225 index. That's a Japanese market. And the Taipei index is also crashing by 4.65%. So you can see, right, it is a very steep bloodbath. And fortunately, for some people in the Singapore and Malaysian market, I think we are okay. But in these markets, it's really a terrible crash. So really, is the AI bubble bursting? And this is likely to have some spillover effect to the Nasdaq. So because they're all linked together, we are now looking at the possibility of a Nasdaq crash. And if the Nasdaq were to crash, then the S&P 500 will have a reaction as well. So the KOSPI index, which is the Korean one, the Nikkei 225 and Taipei index, have went down quite severely. By the way, the KOSPI index triggered another circuit breaker, which is getting more and more common nowadays. Fortunately, the Hang Seng and the Shanghai index hardly move, and the Australian index and the Singapore index are quite okay as well. So it's really targeted at AI-related markets. So now, just to take a closer look at the KOSPI, Nikkei, and the Taipei index, they are now actually from their all-time high, they are now in quite a steep crash. So the KOSPI index have crashed by 35%. This is by definition a bear market. Anything more than 20% is a bear market. The Nikkei 225 is down 14.6%, and the Taipei index is gone down by about 14% as well from the all-time high. Now, before you think that, wow, this is terrible and things like that, well, from their 52-week low, they have actually still gone up by a lot. So in short, this is basically an overinflated stock market that needs some chilling and is cooling down. So it is basically a repricing of unreasonable extraordinary gain. So this is not really a fundamental collapse yet. Why are they falling? Well, if you deep dive into the stocks that led to the collapse of this index, it's largely because of chips. So the Korean index went down by 10 over percent, largely because of two stocks, Samsung Electronics and SK Hynix. And this has now a great fall, and I'll explain to you why there's a great fall in these two stocks. Now, the Taiwan index has more broad base, but it is still coming down. But at least those chip-related, DRAM-related, electronics-related stocks does not constitute like the Korean like that, right? More than 50%, just two companies. And so did the Japanese market have the similar experience as well. Well, the reason for this crash is because of China electronics and China chips companies now having an IPO. So CXMT has an IPO yesterday, and the IPO went up by about 500%. 500%. This kind of bull run is very, very rare across the world. So the first day, one day surge was incredible, and they raised about $8.6 billion. And they are now challenging the oligopoly, which means it's almost like a monopoly, but now dominated by a few companies, which is particularly the chips company, Samsung, SK Hynix, Micron. All these companies right now are sitting on comfortable profits, comfortable market share, but the Chinese manufacturers right now are challenging their position, and they're challenging it really well, cheaper and faster and potentially more innovative in time to come. So this is now a worry to the rest of the AI world, which is sitting on cozy profit and cozy protected market. And right now, the Chinese are coming to challenge them. I always believe that the Chinese, once they get their act together, they can challenge any market. And once they do that, then God help us. So with this right now, the expectation of the earnings that is coming from all these chips company right now is potentially coming down. So SK Hynix, Samsung Electronics, Tokyo Electron, Avantes, and Kyosia from Japan. All these companies right now have very rosy profits, very rosy earnings, and very rosy projections. And suddenly, when the Chinese come and challenge them, of course, these earning projections are going to come down. Now, there's always this question whether the AI companies are overspending on their capital expenditure. And all the big techs, the Magnificent Seven, out of the Magnificent Seven, I think Magnificent Six are all spending like crazy on capital expenditure, fighting the AI race, except Apple. And right now, the minute they say we're going to spend more on capex to run the AI race, the market sell down on them. So they don't believe, as in the market don't believe that this buying of this huge capex will commensurate with a very good profit in future. So they're all selling down on this, and as a result, the market has a strong reaction to all the big Magnificent Seven or Magnificent Six companies. Now, a quick word on oil market. Actually, the oil market went down quite a lot, right? It's gone down to $85 for Brent crude and $82 for WTI. That's a huge drop from the $100 that we saw a few days ago. And that's largely because right now, Donald Trump ran out of steam. And of course, he says that, oh, we're going to give the mediator a chance for peace and things like that. But the underlying problem of Middle East is not over. The Iranians still want the control of Straits of Hormuz, and the Americans want the nuclear, the nuclear residue of Iran, and the Iranians are not giving in. And the Americans don't want the Iranians to control the Straits of Hormuz. And all these problems is not going to go away. So I don't know what miracle can happen to resolve this. But as it stands right now, the oil price coming down. If you were to note, oil prices coming down has no bearing on the stock market right now. Everybody is just looking at the problem of AI. If AI is being beaten down, whatever happened on the good side of oil, bopake, there's no good impact from it. Now, just to be very clear, the Federal Reserve is likely going to have a decision to make soon, whether to hold the interest rate where it is or to increase the interest rate. I don't think there's a chance that they'll cut the interest rate. No chance. That's largely because there's inflationary pressure and inflation is set to continue. Now, with that, then there's a likelihood that there will be some impact on the stock market. So we shall wait what is going to happen. Bank of Japan is also going to make a decision whether to increase interest rate. So by the way, the yen, the Japanese yen has come down a lot. Okay, so those people who are going for Japan for holidays, wonderful. But those Japanese stocks, as a result, are not worth as much as anymore. And I think this is quite a serious matter. So what do we do? What do we do? Well, I always believe in crash buying, and I know there are a lot of skepticism on it, but this is a wonderful opportunity to crash buy. Now, I always believe in crash buying on the S&P 500 predominantly, and then a slightly smaller position in Nasdaq. But right now, the Nasdaq is taking a steep cut relative to that of the S&P 500. So maybe I would start to consider taking initial position first in the Nasdaq, then we can wait for the S&P 500 to happen. Now, just to take note, a lot of people say, oh, the crash will come, so I sell first, then I buy later. No, I don't believe in that. I don't believe that that's the right strategy. You're supposed to hold on to your stocks that you have, especially globally diversified portfolios, for a long period of time, decades long, that kind of thing. And then you deploy your dry powder whenever the market crash. That's my belief, and that's made me quite a lot of money, and I strongly encourage people to think about this approach. Okay. Now, this is also the time that I want to tell everybody, crash buying is not simply market come down, I buy. Buy when, buy what, how to buy, right? I think this crash buying strategy need to be pre-designed up so that you are not kalang kabut. So what do we watch out for? Nasdaq. We shall see what will happen to Nasdaq tonight. Now, maybe Nasdaq would just shrug off the whatever is happening in Korea and Japan and Taiwan. But I think the underlying worry will still be there as well. Fortunately, Nasdaq is more diversified. Have 100 companies behind them. Is Nasdaq 100 companies behind them, and not all of them is heavily weighted in the AI space. But however, it will still have an impact, as we can see. So let's watch it very closely whether the Asian market turbulence will spill over to the Nasdaq. And there are many big decisions that are going to come on the Federal Reserve side, and we shall watch and see what will happen. So let me know how you feel about this situation, and are you ready to crash buy? Okay. Well, thank you for watching, and I'll see you in a live stream tonight. Bye bye.